Let me bring in somebody whose opinion really matters in all of this. Mohamed El-Erian. He's PIMCO co-CIO and also the CEO of the world's largest bond fund. Mohamed, great to have you back on my program. Really appreciate you making the time. Now, you just heard Ken say that he doesn't see this bloodbath, that this statement was basically a political statement. I'm hearing that a lot as well. But this is the Sputnik moment that you were talking about, though, right?
We hope so. We hope that this is the wake-up call, that this is what politicians needed to realize that unless they get their act together, the U.S. is on a secular decline and the standing of the U.S. is going to go down. Unfortunately, Betty, this weekend didn't speak to that Sputnik moment. So we had a few things going on. We had a very public and unfortunate clash between S&P and Treasury. That doesn't help either side. And we also had a blame game in Washington where everybody's asking who lost the AAA, and they're pointing to each other, and no one wants to come together as yet. So let's keep our fingers crossed, but the early indications are that this has not yet been the Sputnik moment that we need for this economy.
Okay, well then what do we need to get to that point then, Mohamed?
I think people have to realize that the S&P downgrade is not really about the ability of the U.S. to meet its payments. No one doubts the ability of the U.S. to meet its payments. It's about the ability of the policymakers to get their arms around the problems and put this country back on the path of growth, jobs, and prosperity. And until they do that, we risk further downgrades. In fact, let's not forget, S&P has us on a negative outlook, and Moody's has us on a negative outlook.
Well, do you expect that we may see downgrades from Moody's and the other agencies?
I think only the agencies can reply to that. What worries me most, Betty, is that this is a further hit to business confidence and to household confidence. It comes at a fragile time for the economy, and it's not a surprise that most analysts are busily revising down their growth estimates, and there's been so much talk over the weekend of recession even. So this is not a good situation, and we've got to remember how fragile the economy is.
Mohamed, I'm curious to know, what are you going to watch for in the market reaction today to give you any clues about what's going to happen in the next month or two? What are you going to look for today?
So a few things. One is look at what equity investors are doing. Are they throwing in the towel or not? Are they going to stay in there, or are they going to say enough is enough? I can't take all this volatility. I can't take all this uncertainty. Second, look at how Europe responds to what was a pretty dramatic statement by the ECB and indications that they are buying Italian and Spanish bond. And thirdly, keep an eye on the sovereign CDSs. Okay, because S&P has opened up not only the prospects of further downgrades to sub-sovereigns in the U.S., but like you said earlier, it raises the questions about other sovereigns.
Well, it's an interesting point, Mohamed, because do you believe that from this we are going to see downgrades of other AAA countries? I mean, there's a new metric here by S&P. They're making a statement on the politics of a country. They've got to apply that to others.
Yeah, I don't think they're making a new statement. They have 5 factors which they've had for a long time, one of which is the ability and the willingness to apply. So where politics comes in is in terms of willingness. Ability speaks to whether the engineering can be sorted out. Willingness speaks to whether there's a political will, and they've had that all along. I think what the market is looking at is they're looking at other countries, and you mentioned France as an example, and saying, wait a minute, French debt to GDP is higher than the US. Yes, it is on a downward trend as opposed to an upward trend, but isn't France in for all the support for the peripherals? And isn't that a contingent liability? And that sort of talk is very unsettling, and it's why French CDS are so much wider today.
Let's return to the conversation with PIMCO CEO Mohamed El-Erian. Betty is down at the New York Stock Exchange. Mohamed, we'll hear from Betty in just one second. However, a couple of minutes ago, you told her no one doubts America's ability to make payments on its debt. I'm wondering, though, is that just a short-term thing? Because you're familiar with the Congressional Budget Office estimates, whether it's Simpson Bowles, whether it's Paul Ryan. We all know how entitlement spending is going to swell in the years ahead. And what happens if investors change their minds about the credit worthiness, about the attractiveness of treasuries, and start to change the view that ultimately results in higher borrowing costs for the U.S. government? Will you be as confident then that America can honor its debts?
Eric, there's two issues. There's credit risk and default risk, okay? Credit risk is whether borrowing costs go up because a country's deficit and a country's debt is out of control. Default risk is whether a country actually defaults. Now, the U.S. is a very, very long way from default risk. In addition, it has a printing press. We mustn't forget that. Unlike Greece, unlike Portugal, unlike Ireland, the U.S. has a printing press. So the U.S. has many ways to avoid default. The best way, of course, is through growth and fiscal soundness. But there are other ways. They have collateral damage. But the U.S. has many more degrees of freedom than Greece does, for example.
Mohamed, let me pick up on that, because you point out in an editorial, an op-ed that you wrote in the Financial Times this weekend, that we may see an acceleration in the so-called unsteady migration to a multipolar system where the U.S. is no longer the center of the financial universe. I'm wondering, in light of the comment you just made, whether that's such a bad thing, because yes, America has this printing press, but there are many people out there who would argue that it has abused the exorbitant privilege that allows it to issue debt in its own currency in unlimited fashion.
Yeah, that argument, Eric, is certainly what other countries feel, and what the Chinese said over the weekend speaks to that. What I was referring to is the following. The global system is built on the assumption of a AAA at its core. That AAA supplies the reserve currency, the dollar, and supply the most liquid and deepest financial markets, the U.S. government bond market, and that enables other countries to outsource their savings to us. As that AAA comes under pressure and becomes a AA plus, people are going to look at the margin for alternatives. So what you get is a fragmentation of the global system. And that's the path we're on if the U.S. doesn't promote growth and fiscal soundness.
Mohamed, you mentioned earlier, you've been talking about this, the printing press. Well, who controls that printing press right now? None other than Ben Bernanke. What does the Fed, what does Bernanke have to broadcast to the markets in order to restore some confidence?
All this puts the Fed in a very, very tough position. The first thing it has to do is it has to revise down its outlook. The Fed still has a very cheerful outlook for growth bouncing back. And it has been talking about transitory elements and not enough about structural elements. So the first thing the Fed's going to have to do is have a reality check on its projections. The second thing is the Fed is going to have to be very clear that when it comes to conventional policies, interest rates, it is not hiking anytime soon. The third element is the most controversial. The Fed is going to have to decide between the benefits of unconventional policies, QE3, versus the costs and the risks. And I'll tell you why the Fed is uncomfortable, because over time, the costs and the risks have gone up and the benefits have gone down. So it's not so clear as it was for QE1, for example, whether the Fed should have another round. So this is going to be a very difficult time, and I suspect quite heated discussions at the FOMC and at Jackson Hole.
Okay, Mohamed, thank you very much. I really appreciate you spending this time. I know you've got meetings after meetings today. It's going to be a very busy morning for you and for a lot of others.